For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Let's move on to thinking about our trades in terms of, I call it a job. Like, what job? What's the job of this trade in this from this perspective? And the buckets that I have here, I've kind of determined is, let's say you've got a collection of strategies or ways to go to the market. So maybe you have a rules-based trade. The example for the pro traders example I think of was, I remember David did the car trade, and I can't remember exactly what the strategy was. It was a very simple
bull versus bear type of strategy.
Yeah, that's what it was.
Yeah.
And it had a specific. It served its specific job and had a specific purpose, right? So that's kind of an example of that. And of course, any of our trades, rules-based, just straight up rules-based as a Go trader would fit into that type of trades. And then you can have your more shorter term stuff, right? And I'm going to go through the jobs or characteristics of each. I just kind of want to make sure we understand what all the headings are and the columns here. So this could be, anywhere from day trading or, futures. It could be the 0 DTE verticals. A lot of folks do. It could be, the short-term calendars that a lot of us were doing before. So there's a big difference in terms of what purpose or job that may serve. And then there's some that have, what I call kind of algo trading. It's rules-based, right? So an algorithm is a set of instructions, but it's triggered based on market signals. Now, I'm not saying everybody has that, but some do, right? That will have a certain job and a certain purpose. And then, of course, subjective campaign, which is what I would call primarily what we're doing, in the pros, is applying the strategies that we have and setting them up against the market that we see. So with let's just say you had that kind of collection of ways to go to market, and depending on your strategies and so on and so forth, what I'd like to do is think about what job does it have or characteristics. So like for a rules-based trade, is it a campaign, meaning is it a time commitment, right? Absolutely. What's the management load? How much of my personal time, mental capital is it going to take to manage that trade? Now, obviously, this is going to depend. If it's a bull trade, it's pretty simple. If it's an M3 and I'm guidelines only, that's a stage 4 trade. That's going to take a little bit more time. So this is not a statement about the trade. It's a way to put it in buckets and characterize them in such a way that you can put them in their proper silos and understand, if I want to, have a really simple trade because I know I'm going to be busy with other stuff in my life, I don't want to put on, an M3 that switches into a bearish butterfly if I have a trigger that happens on a 5-minute bar. I'm being extreme in my example, but that's going to take a lot of my management, right? That's going to take a lot of my time. So I want to think about that. I want to put those characteristics to that trade. Rules-based, always in the market. I think, John, you hit on that earlier. If you are just starting out, you probably, for a while, for a few years or so, probably do want to always be in the market. But like I said in my opening statements, if you're a pro trader, maybe you're not. If you have a rules-based system. Now, let me back up. Think of this in terms of the trader that might have all of these going on. Like I've got a little rules-based trade, like the car trade, makes a couple $100 a month. I've got my 0 DTE verticals that I do. It's a form of day trading, right? I've got this instructional algorithm trade that I do when the conditions are right. It's basically I have a trigger and then it's just following a simple set of rules. And then I might have the type of trades that we do here that we've always been talking about, right? I might have all that going on at once, but I want to make sure they're all serving a purpose and they have a specific job, and then I'm keeping on top of it as to what they're supposed to do. Because the reason this topic came to my mind is because we could cross ourselves up and think about like, well, this trade, didn't really work. I'm going to go back to rules-based stuff. Or, the market's just moving so crazy right now. I had a couple of winners here, but I'm going to go over here. And it's kind of a form of strategy hopping. And I think if you organize the trades in the way that I'm lining out here, it might help you deploy them in a more effective way. And I'm not saying you have all four going, but you might have, one or two of them going on depending on what their purpose and job is.
Right.
Does that make sense, John? Yeah.
It does. And just a side note. So when we discuss strategy hopping, and we're not saying to, pick one strategy and trade it regardless of what's going on in the marketplace and do it all the time. What we're talking about is, we fully would like to see you trading different types of strategies and swapping between strategies as a pro trader, depending on what the market's doing. In other words, you take a look at what's going on in the market situation, and you make an educated decision how to trade that market situation. And it's going to be different every time because you're going to have changes in the marketplace. When we talk about strategy hopping, we're talking about the guy who comes in or the girl who comes in and she's like, or he's like, well, I lost this trade 3 times, so now I'm going to try that trade. Right. And or this one looks like it's been look, this guy's been doing this trade strategy. It looks like it's been doing well. I'm going to try that. Oh, that trade looks neat. I'm going to try that. Right. That's strategy hopping. You're just randomly jumping back and forth.
Shiny object syndrome.
Right, you're chasing the shiny object. Exactly. And that's what you don't want to do. That's when you're not going to get any.
Right. And this, I think going through this exercise will help you to discern that and avoid doing that, right? Is think about these trades in terms of from different perspectives, right? So if we were just staying with this example of a rules-based trade, we'll go down this column and read it. So, there's no IV analysis, there's no TA or price action analysis involved. It does have an applied rule set. It's not subjective. And prep time, you want to think about prep time. How much prep is required for my trades? Once you've learned the rules, a rules-based trade and back tested it, there's no real prep time. But when you come over here for your subjective campaign, you better have some prep, right? You got to trade plan that out, and you got to bake that into the cake. So maybe we'll just go down here because it's kind of opposites in a sense. It is a trade campaign. The management load is going to be much higher in this, whereas say for my algo trade, it's just going to do it. I'm not saying like an automated system, although some people may have one, but a trade where you might check it at the end of the day, and 2 days out of the week you need to adjust it, right? Or it's just something that's just following a very simple set of rules and system. I mean, it's not real different from a rules base, but I just put this in here because this one might be based on what is happening in the market, whereas just a straight up rules based from our go stage 1 through 3, our go, it doesn't really matter what's happening in the market for the most part if you're just trading about the guidelines. So just to kind of differentiate that.
Can I throw out a few comments, Stephen?
Absolutely.
Yeah. Okay. So I mean, first of all, comment number 1 is the rules-based trades. There's nothing wrong with going in and saying, you know what, I like the M3.4U trade. I'm just going to trade that every cycle.
Absolutely.
I don't have a lot of time. My prep requirement's low. Over time, that strategy does really well, provides really good returns on average. Over, if you take it for a 5 or 10 year average, it has extremely good returns. So there's nothing wrong with that. The challenge comes in is when you expect it to win all the time, or you start varying your confidence levels on whether it won the last trade or the last 2 trades or not. And you start varying your trade size and all that other stuff, or then you start jumping strategies. That's the problem with that method.
Yeah, that's a great point. And, that's probably something I would include if I were to expand this out, is expectations.
Right. Your expectation is, so long as the market, kind of matches the advantages of the trade or doesn't push against the disadvantages, I'm going to do well. If it pushes against it, I'm going to do poorly for that period of time. And I accept that ahead of time. I know that ahead of time. I stay properly sized, and I I'm continually steady with my capital so that I can, experience those positive returns over time, that's perfectly fine. Right. When you start going more consistency, that's when you get to the subjective campaign. And I had with your subjective campaign, management load, you say is high, but I would argue with that.
Okay.
And say that my management, depending if your prep time is definitely high, right? So our prep time is high. It's paying attention to the market and so forth. But usually once I get into a trade, normally most of my management load, I guess it would be high if you include prep time, right? But most of my management load during the trade tends to be kind of low because I already know all my points at which I'm going to do something. And a lot of times it's actually less time intensive than a rules-based trade.
Yeah, that's the whole point of this exercise, right? Is to kind of think about it. And what I have on this chart may not apply to to what any of the other traders are doing or their perspective. Of course, if you don't, you might have a deal where free flow trading as a subjective trader, that would have a high management load. If you look at
that would be very
from,
high.
From the perspective of, I'm just going to see what the market gives me. So there's definitely some different ways to look at it. And again, this is just a template and an example.
Absolutely.
But that's a great way to look at it. None of this is absolute. Some of it you could argue is, but again, it's just to kind of get you to thinking about what's the purpose, what's the job of what I'm trying to accomplish here, as opposed to, you don't always want to get in the situation. I think it was you, John, that gave the example of the little kids playing soccer, right? When the beehive and the ball gets kicked over here, everybody just runs over here. So, the short dated stuff's working. We all run over here. The 0DT stuff's working. Nothing wrong with that, but I'm saying have more than just one approach or a way to go to market, to access what's happening in the marketplace. Maybe you don't have time to do all these different trades. A lot of times I like to have at least two going on, or two styles, two approaches, two jobs, one where I don't have to think much, one where I know I'm gonna have to think a lot more with prep and management, but I'm gunning for bigger returns. Those are the kinds of things I want to think about. And then, let's say you want to take a bit of a timeout for your subjective trading, but you'd like having a real simple trade I don't have to think about that's going on right now. Maybe you have that going on in the background to satiate a different purpose.